If you're a mom with student loans, this is your wake-up call. Federal student loan payments are back, and if you are not ready, the government could take your tax refund as well as garnish your wages if you are working. But what if you are a stay-at-home mom? What if your household lives off of one income? We're going to break it down so you can protect your finances and protect your family. Thank you for joining me here today at Sisters for Financial Independence. My name is Catherine Agapjan, and here at Sisters for Fi, I cover topics related to money, motherhood, and everything else in between. My goal is to help you make smart money decisions for today and for tomorrow. Today, we're talking about three key things: how restarting student loans affects moms and future moms, what stay-at-home moms need to know about these repayments, and how to avoid losing your tax refund or paycheck to student loan collections. What does this mean for moms? If you are a mom like me, you know that funds at home can be tight, and adding this extra line item can strain your budget. And as a mom, you know that we always put ourselves last, and this normally also goes with money and debt. But here's the reality. Over 1 in 3 moms with kids under 13 are still paying off their student loan debt. So they are competing with paying down their own debt, but also thinking about saving for their kids' college education. Number 2, some moms have debt, but no degree to show for it. If you're planning for a baby, if you are already on maternity leave, or if you are already in the throes of parenthood and working, you know that adding another line item to your budget can crush you. So it's important to face this head on, face this smartly. One of the challenges with student loan debt that no one ever tells you, student loan debt can follow you years into the future. When you have kids, when your kids might be ready to go to college. So you want to figure out how much you owe and figure out a plan in place to finally get this paid off and get it out of your mind and out of your budget. Here at Sisters for Financial Independence, I constantly encourage young women to think about financial independence early on. Money saved today buys freedom tomorrow. And when you don't have student loan debt hanging over your head, you have more options and more freedom, especially as you think about the next phase of your life, whether that includes motherhood or not. So what is happening with federal student loans? Federal student loan payments are back after a multi-year pause. This means if you owe federal student loans, you should be making payments again now. If you are behind, you could face collections, which includes wage garnishment as well as a Treasury offset. A Treasury offset is basically when the government can do two things. They can take your tax refund or take other federal benefits like Social Security if you are in default of your student loan debt. The only way to avoid your money being taken away is to not let your loans go into default. Get in control of this and stay in control. All right, let's talk strategy when it comes to paying down your loans. Remember, this is for federal student loans. Unfortunately, private student loans are a whole other matter, and we won't cover that in this video. Now, for federal student loans, you are considered to be in default if you have not made a payment in the last 270 days. You can see the status of your student loans by logging onto studentaid.gov. Now, there are 3 ways that you can get your student loans back into good standing and out of default. The first option is to pay off your student loans. If you have the means to, if you have some savings, do that so that you can finally forget about your student loans, get that out of your mind and get it off of your plate. Now, I know this option is not going to be practical for a lot of borrowers, so your next 2 options is something that you will need to work with your loan servicer to agree upon. So put the effort in to contact your loan servicer and figure out a plan that works for you. Your next option is to do what's called a loan rehabilitation. And it's basically a program that allows you to bring a defaulted federal student loan back into good standing by making a series of agreed upon affordable payments. Now, the terms will vary depending on your loan, but it's crucial to speak with your loan servicer. And I'm also going to highly encourage you to negotiate as best as you can so that you can make those payments affordable for you and your family, but still work through paying down your loans. How does loan rehabilitation work? So basically, you agree in writing to make 9 voluntary, reasonable, and affordable monthly payments within 20 days of your due date for the next 10 consecutive months. And after successful completion, the default status is removed from your credit report, though the late payments do stay. But this is one way you can bring your student loans out of default. Loan rehabilitation does require you to start paying off your loans, but it may not be as much as you think. And once you remove your default status, it can improve your credit report, it can improve your credit score, and that might help you in other ways when it comes to the debt that you have. It's also good because it can stop wage garnishment, so you don't have to worry about that. And of course, it makes you eligible for some of the other income-driven repayment plans or deferment or forbearance. So if you can figure out a monthly payment that works for you, going into loan rehabilitation can work to get you out of default status and get you on the path towards figuring out a longer-term solution to pay down your debt. I do want you to consider when you do loan rehabilitation that it does take months because you have to be making those consecutive monthly payments. That's a sign that you are committed to paying your loans down. It's also only available once per loan, so you want to make sure you're strict with your budget. The next option is to do a loan consolidation, and this is basically where you combine a few of your federal student loans into one direct new loan. When this happens, it will pay off your defaulted student loans, so those will no longer be in default, and now you will have one larger consolidated loan. Now, in order for you to even go through the process of loan consolidation, you have 2 options. You can make 3 consecutive voluntary on-time payments on the defaulted loan before you consolidate, or you agree to repay the new loan under an income-driven repayment plan. The loan consolidation process is a little bit faster than rehabilitation, usually weeks instead of the 9 to 10 months. It restores your eligibility for income repayment plans, deferment, forbearance, as well as forgiveness. And now you have one larger loan with a fixed rate with your one loan servicer, and that can simplify your payment. Now, the cons is that it does remain on your credit report, which affects your credit score and other means of borrowing in the future. And there's no second chances with this because once you consolidate, you do consolidate. So you want to look at what that final amount will be when you consolidate and what that monthly payment will be when all of those loans go into one. And because you are basically closing out your other loans and creating a new loan, you do lose progress towards any type of loan forgiveness if you have started that process on your other loans already. So keep that in mind. Definitely talk with your loan servicer to figure out all of your options. So it can be daunting to see a list of your student loans in your dashboard. And it can be nice to have all of them consolidated into one loan. But note that one loan now means a larger balance and a larger monthly payment. If you are able to see all of those loans as independent and are familiar and can work the snowball method, that might be a great option for you. The snowball method is one of the most popular ways to pay off debt, and it really capitalizes on small wins. And I want you to learn more about it, so you also keep that in mind as you figure out your repayment strategy. I will link a video in the description so that you can learn more about the snowball method and how to use it to your advantage to finally get rid of these loans. If this video has been helpful, give it a thumbs up, and I want you to share it with a friend who is also going through the repayment process. Consider subscribing to Sisters for Fi for more money tips to help you with your money. All right, now that we know what's happening, now that we know what our options are, it's time for you to take control and take action. And the first thing that you are going to do is just know where you stand. You are going to log on to studentaid.gov and see what you owe. Facts our friends this time around. When you log on to studentaid.gov, read as much of the documents that they have sent to you, know exactly what your balance is, what the interest rate is per loan, and the payments you need to make. Ignoring this doesn't make it go away, it makes it worse. If you are part of a couple and you file married jointly and you both have student loan debt that is in default, face the music together, figure out a plan of action that both of you can work together to pay down these loans. Again, these loans have a way of carrying forward, and you really don't want to take that into the next few years of your life. The next thing I want you to know is to know your filing status, as it can influence how much you'll need to pay when it comes to your loans, and if the government can garnish and take a part of your tax refund. Now, for married couples filing a joint federal income tax return, your loan servicer will use your combined income to determine your eligibility for an income-driven repayment plan and calculate your monthly payment. Now, if you are married and you file separately, the individual income of the student loan borrower will be used to determine the income-driven repayment plan. Now, if you are filing jointly and you have a higher income, it could mean that you'll be paying more in terms of monthly payment. On the flip side, if you are filing separately, it might lower your student loan repayment, but you could pay higher taxes overall. So you might also want to reach out to your tax advisor to figure out the best way to do this so that you have the means to pay for your student loans, and that at some point you won't have your tax refund being taken by the government. Quick PSA, during this time frame, there's going to be a lot of scammers trying to scare you and get your money. So be on the lookout for those. When you contact your loan servicer, make sure you are using the number that is provided in all of your documentation. If you get a call from another company asking you to enroll, pay for some kind of fee to get you out of your default status, don't believe them, walk the other way. Your loan servicer should be helping you by default for free. They will not be asking you for money. Their job is to help you through this process. The next action item that you are going to do is to read through all of the documents that your loan servicer has sent you. And I also want you to go to myeddebt.ed.gov to learn more about getting out of default. There is so much information out there that the government has published, and you will need to read through that so you know your best options. And I know some of this stuff isn't so easy to read, it's a little dry, but these will inform you and give you the best way to figure out how to get out of default and how to ensure that your payments continue to be processed and that you are paying down your debt balance. As you also work with your loan servicer, make sure you document everything that you can. There is a lot of uncertainty with the Department of Education, and a lot can trickle down to some of these loan servicers where they may not know or might be paying attention to a lot of the laws or executive orders that are coming out. So you want to protect yourself and make sure that you have everything documented in email, in writing, and you have that handy, and you also track your balance so that you know your payments are being made properly and that you are reducing your debt and that you are working and putting your best effort to pay down your loans. Now that you have a sense of what you owe, it's time to work your budget. So you are going to figure out a budget, but work backwards with student loans in mind. Start with essentials: rent, childcare, food, prescriptions, insurance, and then factor in your student loans, and then work backwards from there. See how you can prioritize student loan repayments as part of your budget. This might be the time to trim your subscriptions, trim takeout, and meal plan instead. This will be the time to really get a handle on your budget and push the student loan repayment higher on your priority list. Now, I have a bunch of videos here at Sisters Forify to help you with your budget. I am going to link all of them in the description so you can find a method that works for you, some tips to help you even just get a little bit of extra dollars during the month so that you can send that out directly to your student loans and get those repaid fast. If you are unable to meet the initial monthly repayment amount that has been proposed by the loan servicer, negotiate, negotiate, negotiate. Really, all the government wants to see is that you are making every effort to pay off your debt. So if you can negotiate for a little bit of a lower rate so you have some cushion and a buffer and you're not putting yourself in a predicament, then do so. But ask and work with your loan servicer to make sure you can get those monthly payments submitted on time and get your loans out of default and start paying it down. This might be a time period in your life where you are going to bust your butt off to get those side hustles, make some extra money, sell all the things in your home so that you can get your loans out of default. Now, the big question is, can the government really garnish your wages? And can they do the Treasury offset where they take your refund or Social Security benefits? And yes, they can, but only if you remain in default. Again, the government really wants to see you put in the effort to get out of default. You're negotiating and trying to make way to repay your student loans. So, if your loans remain in default, if you are a one-income household and you are not working, the good news is that they can't garnish your spouse's paycheck unless they have signed for your student loan. So unless they are a co-signer and their name is on there, that's a good thing. But if you are married and you file jointly, the government can take your tax refund. The next thing that I'm going to recommend as an action item is to make sure you have a plan for any extra money that comes in, whether it comes from a windfall, it comes from as an extra side hustle, or it just comes from you selling a bunch of things online or you doing some babysitting. Have a plan for that money. Make it a rule that a percentage of that earned income is going to go to your student loans. That way you know that you're paying it down and you're sending money right away to get this loan down as fast as possible. Remember that small wins matter. So if you pay off one line item of your student loans, celebrate those. Stay ahead as best as you can. Get proactive and really face the facts about your student loans. Don't let these student loans, though, derail your bigger goals. There's more up ahead, and make sure you stay on track. I know some households will have some tough conversations in the next few weeks. To help you have the money conversation with your partner to budget and prioritize student loan repayment, I created a free worksheet to guide couples through student loan repayment planning. You can grab the free worksheet in the description below. You've got this. And if you have any other questions, leave it in the comments. You don't have to do this perfectly, but you do have to do something. Please do not ignore your student loans, as they will continue to accumulate interest and ensure you owe more in the long run. I know that student loan repayment is going to be tough, but I know that you've got this. Do not let student loans derail your financial plans. Do not let it steal your peace of mind. You've got options. So make sure you consider all of your options when you're paying down your student loan. Thank you again for tuning in to Sisters for Financial Independence, where I cover money tips to help you be better with your money. To help you with your budget, I'm going to recommend this entire budgeting playlist so you can get tips to streamline your budget and make room for those payments. For other savings tips, this video is going to be for you. Thanks again, and I will see you next time. Bye.